All right, guys. Hope everyone is doing well. Please read the disclosure. I'm back from my trip, so I figured I would do a little bit of a live midday report because we all came in here today not really knowing what to expect, except for having our process and our plan. So let's go right to hello, everyone. Just in case you've never seen me before, I'm Red Dog, Chief Strategic Officer at T3Live.com. I typically do a morning call video for Red All Access and a recap every day. But that's part of Red All Access besides my 10 to 15 to 20 charts that I post with updated thought process on them. So what I did is I figured let me just do a midday report since some levels held, some strategies have worked, some things could continue to build or not. So when I go through these charts, you're going to see some things that I wrote earlier. I'm not changing them. Some, with a bunch of if then that type of statements that could have led to really nice cash flow without taking excessive risk overnight. Then let's just get to it. So if you look here, this is what I posted this morning. I did actually put this on the live also. This was the chart of the S&P. Okay, so everyone knows I do love the red dog reversal, which is a tactic to use if you come in flat. Well, today, if you came in flat, um, basically this was the level that we were talking about that was very important. 2856 micro support. Okay, that was from here. This low here, if you look up to your left, when I'm pointing to it, that'll show you that level. So this was 2856 and this was 2860. So what did it do? It pushed below both lows in the first, like, I don't know, 15 minutes, and then sellers could not keep it below. So when I talk about commitment to things, if the sellers had strength, if there was going to be commitment to the down move, okay, then it would have had to stay below. Instead, it went below. Some people might have shorted thinking, hey, now that we're below here, we're going to get to here, which could have happened. Instead, it pushed below, reclaimed it, then you could have been a buyer versus the low of the day. The low of the day was 28.53. So 3 handles of risk from Monday's low, 7 handles of risk from here, and now here we are as high as 28.88. So, what is it, 20 handles or so of gains versus your calculated risk. So this was your important area for the day. So if you read the commentary, S&P futures are on the morning lows, down 8 as there are some bear flags and lower consolidations across many stocks and sectors. If these patterns resolve lower, SPX will need to get and stay below 28.56. That's where that came from. So when you hear my language, I'm trying to let you know why I'm saying it and how I'm saying it. 28.56 to get to here, to this ascending channel line, it has to get and stay below it. If it doesn't get and stay below it, the sellers don't have powers, and that means the active bulls took over for the day. It could be for an hour, it could be for 2 hours, it could be for the next day and a half. It all depends on how it goes. But either way, it did reclaim it. So that was your entry if you were looking to be long. I bought the spiders then. And then if 2 on 2056 holds or gets reclaimed, expect a lot of the choppiness. You're not going to see this downside moving. Right now, this overall range is now getting very defined and it's starting to constrict more. Here it is. Okay, so now resistance is 28.98. It could stop anytime before this. At this point, this already negated whatever meaning that had, which wasn't a lot. It was just a day in the life. And now we're still in a mini range within a bigger range. Here's 29.40 and here's 28.25. So right now we're constricting. Some think we're strong today because it's the last day of the month, so they're trying to do a little bit of window dressing, and that could be true. So people don't freak out when they look at their losses for August or whatnot, or some of the money managers don't get paid if they were worse than the actual indices. So anyway, and then you also get some new funds, or new flows, which could happen tomorrow. So that could add some buy pressure. So you don't want to, if you're thinking we had to break this zone and you don't have a threshold for pain, then you better have covered when this got reclaimed. Or if this gets taken out, okay, that's a spot to cover too. But anyway, this overall pocket pivot, bear flag, lower channel, whatever you want to call it, is still being navigated. And from day to day, it's been very choppy. It's been very violent. There's been money to be made. But if you look for extra follow through, if you've added to longs after strength, it hurts you. If you pressed shorts thinking it was going to break, that hurts you. But if you played these ranges in the middles using your pivots, you could have netted some cash flow over the course of the last month or so. But it hasn't been easy. So at this point, still, market hasn't decided what's next. All you know is that the accelerated trend has been broken, which was right here. We're below the moving averages. So when we're below the moving averages, I'd say you want to be tactical. Here on this break, if you remember back when, it broke above the moving averages. So this was your time to get a portfolio approach. Broke back above the moving averages, stayed above it. Maybe you did it here, and then you had another, 140 handles of upside. Well, when it was above the 821 day, here it lost it. So you never know what's next. If you break below the 821 day, you can see the 50, the 100, the 200 day. But in order to see the 200 day, you have to be below the 821 day. So anyway, now here we are, just within this range, and this is your resistance right now. It looks like the high of the day was what was that, 28.87, and at this point some might say, hey, you know what, I'm going to short verse 28.98 because I think we're staying in this range, or not. But the morning long with the Dow up 200 for no apparent reason with this pivot, I would have taken it off. So if you look at the spiders, you can see the same thing. Okay, the SPYs reclaimed this 285.58. That was this low. Reclaimed 286. So if you would have said, hey, you know what, we break below 285.58, anything can happen, right? Because sellers are in control. We're below a 2-day pivot. All you have below is bigger support, which is down here. Okay, but what did it do? It broke below, and sellers had no power to keep it below for the day or for the next few days. I might have to try to get another point. So instead, I was short pre-market. I started shorting when we broke 286. But then once we got back above 286, I'm like, what do I know? We reclaimed that level. I covered my short, got a little long, and then you had a nice little bounce. So if you bought 286, which if you look up to your left, look at my finger, actually, right here's the prices. This is yesterday's low, 286.03. This is the prior low, 285.58, and it reclaimed that area. So you could have been a buyer with a stop at this low, and you could still be in it. I chose to take my trade. The SPYs are up now 2 after being down about 80 cents. That's a nice range for the day on a Wednesday before Labor Day weekend. But some guys might say, hey, Red Dog, I got the perfect entry. I'm sticking with it until it tells me not to. Okay, either which way, here's your next resistance. This is yesterday's high, 289.95. So there's some room here if it wants to go, or it could stop any which way, or if it starts getting above it, then I think anyone who's been trying to short with a thesis versus the market confirming it. So what's a thesis versus the market confirming it? That's a good concept. So if someone's thesis is that this range is going to break this ascending little channel here and break this series of lows to get down to here, that is a thesis. That's your base case. That's what people are thinking, but it's only a thought. It's only an opinion. Why is it only a thought and an opinion? Because it hasn't happened yet. The market didn't confirm your thought and opinion. So today, it looked like it was going to, and it changed. That's what you call a red dog reversal. A red dog reversal helps you figure out who has active control around that pivot for the morning, the day, or maybe the next few days. So for today, it was the buyers. So if you have a thesis saying, I'm just going to short this entire time in here because I know for a fact that, within 2 weeks, we're going to be breaking this level. I'm going to see a 10% correction because there's Trump's tweets are everywhere. We have the inverted yield curve. We have slowing growth. We have overseas craziness. We have whatever you want to give potential reasons for. Again, that's your opinion because the market didn't do it. So if you build a position that way, you're doing it different than trading it. And some traders will build a position based on their base case and their thesis, and they could make a lot of money if they're right. Some will put 50 or 60% into the thesis, and then when it triggers, they'll add to it because the market's finally saying it, and then they make a lot of money. Or some people just wait to figure out what's what. It all depends on how you want to trade it. So either which way, it's in here, still below the moving averages. It's still within this range of a bigger range. But for today, it was better to buy the reclaiming of 285.58 versus pressing there. The Qs, what did it do? Same thing. This mini range here. It took back 183.08 or 183.71. So same thing. Q hit a high of 186.42. That's up here. And then reverse lower yesterday with a trade down to 183.71. For shorts to work or add, it needs to get and stay below that. If not, the choppiness continues. The big support area is below. So what did it do? It got below it and then came back above it. So it's still within this range. So it's still neither here or there. It's in wait and see mode, take your trades modes, and be tactical, especially the way the market's been trading. The IWM had that big channel. Remember, we said if it gets below yesterday's low and accelerates and stays below, maybe that'll give some clues of weakness for the day. What did it do? It was a fake out. It got below. Some people pressed shorts, went back above. Hopefully they covered. Or if people are saying, hey, we're at the bottom end of the range and I think it's going to be a fake out, you wait till it reclaims that. And then you buy versus the low. And if you did that with the IWM, still means nothing in the overall pattern, but it went a little bit below 144.68 and came back above it. Still in no man's land and still looking bearish, but for the day, there was good cash flow there. You could have made, decent money. 144.68 was this low here. It went to as low as 144.22, so 40 cents worth of risk for what was almost $2. Calculated. That's tactical trading, however you want to say it. When I'm like, you've got to be tactical, that's a way to be tactical without taking overnight risk when you're trying to figure things out and net money. We net money for a living as traders. You don't always have to look for the grand slam home run. A single here and there with the right risk tolerance, it makes sense. Anyway, this still overall is in a big channel. It's still in the lower end of this channel. Remember this RDR sell here? It's still below the moving averages, so one day doesn't mean anything except for if you press the lows here and you think that in a week it's going to be down to here, today gave you less evidence of that. And there was more money to be made by buying that versus selling it. And now if you want to sell it here and say, I'm going to short verse whatever this high from the other day was, this is 148, then you could short verse here if you covered when to reclaim that spot. And that's how you navigate if you're actively navigating. Apple, what are you doing? Small inside day. I was shorted pre-market, and then I wound up covering it also. Why? It reclaimed 203.53. This is the low. You look to your left where all those little pivot look in here. Yesterday's low is 203.55. We were to 203.53, which is this, which is why I write it down. Went below it by whatever it was. I actually shorted more there, and then there was just no downside traction. So I pushed on that trade to figure out you can make more money when it reclaims it, and it's still nowhere. Okay, we talk about retracement rules. This candle, it's still in the, bottom third-ish. So this is still kind of in control, and it's still below the moving average, and it's still very choppy. But it's not below this ascending channel here to give you a real downside to the 200-day for those who are really bearish on Apple. It's just very, very choppy. Breakout failure here, and then got back above, looked good, and then failed again on this day, and then gapped up here after this. That's hard. So make sure you keep taking your trades. Apple is definitely a little bit better than some names, but by no means can you just sit there. Amazon has been weaker. What did it do though today? It held this 1743, so it's still holding this. It's still in the lower range. It's still bearish since missing earnings when it took out 1924 to the downside. Still not out of the woods, but for today, it held support. So if you were thinking it's going to break support and see 1672, not today, folks. If anything, you could have been a buyer versus support, and it was a decent trade to go green when you saw a minor divergence, but I didn't touch it today. Facebook, what are you doing? Still in the range. Facebook doesn't act special. Okay, since the huge red dog reversal sell, what's that? That's what that is right there. Pushed above a this resistance, couldn't hold it, traded back below. That's a red dog reversal sell, and then from there, it's been below the moving averages ever since. Every time getting up there, sell strength. So when it's not special, we don't sit in it. I love to sit in Facebook when it's acting well. If we did really, really well, remember this little trade when it broke above this? It was above the 8-day all the way up until breaking again. Then did it again here. And then on this, it's been below. So, short-term composure, measuring it is how we make a living as traders, or try to. Anyway, it's hanging in here. It's building a little bit of a descending channel. I don't know if it's going to break to the upside here, but 184 is resistance. You got to take your trade, day in and day out. Google, I didn't trade it. Still holding this pocket pivot here. It tried to be special after earnings. Remember that big gap up, and then it traded into it, so it showed you can't sit there. And now it's just in this channel doing a whole lot of nothing. Netflix been weaker than most names. It's just holding this prior low. Some could point to like some kind of descending, channel here that if the market were to bounce, it could resolve or bounce back up towards 305. But again, it's the weakest name out there. So if we are going to go lower, chances are this is not something to be in. If anything, it looks like this is your next spot. This is your big gap after earnings. It pushed into the gap a little bit, went above the 329.85, which was this, and back below it. So that was a fake out sell. And then it's been below this 8-day moving average ever since, which is a time to be out of Netflix. Not like here when it's above it. Anyway, it's going to get tighter here, so we'll see what happens. If the market's going to be decent in September, this probably gets a bounce. If we're going to see, the lows again for the SP, down here, which we don't know, then it's going to hold. But either which way, it's still hanging in there. Okay, within this new mini range. So the bigger range that was going from highs to lows to highs to lows, now it's hanging within it, which it's good. The tighter it gets, the easier it is, or the more visibility you have on which way it resolves, that maybe you could jump on with time versus just playing the ends of the envelope. What else? Okay, Roku was weaker today, but still hanging above the 8-day. Wow. This is why you don't short stocks above the 8-day moving average, even though the market's weak, because they are strong. Now, if it goes sideways, this is your pivot. Maybe it goes again. Shop. First down day below the prior low. Here was extended from the 8-day and the 21-day, but it's been very strong. When you short a very, very strong stock for a cute trade because it's extended, you better be careful and take trades along the way, because when it turns back, it turns quick. Which, here was a little extended and then held the 8-day and went again. So if it gets down to here and you're short, make sure if it holds it, you run away from it and maybe even flip long. But again, it's been above the 8-day. Like here, it broke below it. Everyone's like, Red Dog, broke below it. That's when I got short. Okay, well then it reclaimed it right there, and that could have been your paper cut instead of riding it up short the entire way. What helped lead today's rally? Remember, I was talking in the morning call. We're back at 48.60. Do we get above it and stay above it? That would put pressure on equities. But if we open above it and trade back below it, chances are markets could rally a little bit, because some people will point to a double top, which is still very early for that. But all in all, that was today. Traded above 148.60, came back below. It's extended from the 8-day moving average, so it's hard for it to stay so elevated, so I wouldn't take too much into today. Look, TLT has been a good tell. It's almost back to the August highs. I caught a cute short before I left, which was very cute right there. It hit a low of 143.70 while I was away. Yesterday's highs 147.72. So that was just a bunch of specifics. Opened up above it, came below it. Not much to do here except for if it starts rallying back up, you probably see equities come in a little bit more. I heard there's also supposed to be a reshift, that so much money's in the TLTs are supposed to rebalance a little bit for the end of the month, but we'll see. Gold went red. I know I saw that, but still just a little extended above the 8-day. See if it builds another flag here. My call spread is all capped out, but look at this nice trend. Remember, we're buying the 130s and 135s in this area. I don't remember exactly when, and it was a nice move. And then I sold some 140s, and now I'm sitting in a call spread where I'm long the 135, sold the 140s, and it was a great trade besides other trades within there that we took off. Now let the 8-day catch up and see what's next here. This was that has to be changed now. What is this? 148.82. Did trade above yesterday's high, came back below it, so got to keep managing the trade. So this language will trade later. The language will change for later. What's Beyond doing? Remember this trade below 160? That was a good trade for a lot of you guys. That was the issue price regrouped here around 137, and now you can almost change this again, see what happens in here. Not a whole lot of traction, but it's still hanging around. None of the IPOs are doing so great right here, but little sideways action, and maybe gets above there. It's worth a look. But for now, this was the trend above the 8 and 21-day moving average. Remember how much fun we had there? I think this was one of my best trades of this stock. That was right around here when it took this out. Bought a little bit, add, sell. And then I wasn't in it for that whole thing. But anyway, now it's below, so you're careful. Above, you're not shorting, you're not shorting, you're not shorting. And then this was right around the secondary price. Remember, we had a good trade there. But anyway, now you'll see, does it get tight again in here? If it can get tight again in here, maybe there's another trade. So, but for right now, it's just kind of proving it can hang in here a little bit, and then maybe get some kind of deal with McDonald's or something. I don't know. They could get going. We'll see. ZM, what are you doing? Broke the wedge to the downside. Okay, so that's a little weaker than stronger today. Below the moving averages, so it's not something to sit in. Pins, what are you doing? Oh, look at that. I drew this line this morning. Held it 21-day pretty perfectly after this little king and queens formation where green negated right there. But and I guess I wouldn't sit here either, but I would just take trades. Meaning, like if you got out on this day because it went above this high and couldn't hold it, and then that was up at 35.38, then you have the luxury of testing the 21-day here down by 33. But still needs time. What did CRWD do the past few days? I haven't really looked at it since I've been back. Haven't really drawn anything here. Guess failed at highs again, and then kind of corrected. So if I were to extend this line, this is bigger support. This is that gap. So I guess you could say it held this, but below the moving averages, needs time. If I was trading this thing and I was here, and I was long, I probably would have been out right here. Not this day, but this day would have got me on alert. Probably actually closing the lows after a doji, I would have got out here if I was swinging this thing. Anyway, I'm not in it. It's trying to hold this spot. We'll see if it rebuilds. What's the USO doing? Yeah, a whole hell of a lot of nothing. I don't even want to look at that. What's like team doing? I haven't looked at these guys in a little bit since I've been back. Pretty weak today overall. Nothing special, but not something to sit in for now. It's not falling apart, but it's not something to sit in. Why isn't it something to sit in? Well, check out this prior low, and below the 21 days. So momentum names, I like to be out of it if that happens, or at least a little bit more flexible. What's Coop doing? I haven't looked at this in a while. Might as well. Because if you drew this sideways, it tried to break above this and didn't have enough traction to break out above it. And now all of a sudden it's getting a little bit more downside. Very choppy. I haven't updated this in a while because, again, I've been gone for 10 days in Italy. Hopefully, my charts of the S&P cash helped here and there, just to give you some thoughts. But nothing great here. Just might as well update it while I have you guys doing this with me. What else are people looking at? Twitter. Twitter's hanging in there better than most names. Why is it better than most names? Because it's still hanging above the 21-day moving average, which is constructive. It never filled that post-earnings gap, which is constructive. So if you wanted to be in something and the market turns up, you would think this acts better. So, and today, you could have bought weakness. So do I think it's going to break out and take out 43.24 like that? Probably not. You're better off buying against levels, but it's hanging in there better than most names. So keep an eye on it. What's Snap doing? Snap lost a little momentum the past few days. It's just grinding down. Remember this big gap and go, and this one filled the gap. So now, I wouldn't sit in this for now. I would wait. In another time, a better place in the market, maybe it would take out a descending channel like this. But at this point, it's below the moving averages. It's come a long way this year, so I would take a little bit more care. Let me take one more look at Apple before we go. Overall, hanging in there, still below 50% of yesterday's range. Little red dog reversal around 203.53. I wouldn't add into this spot, but it would be interesting to see if it could take it back to show that the market's not that weak and continue to maneuver. So at this point, I hope everyone's doing well. I was out of town for 10 days in Italy. I tried to post some pictures. I tried to post a chart of the S&P once or twice. Actually, it's pretty easy in Europe. Not easy, but for me, it felt like every day right around 1 o'clock, I was sitting down for lunch. So I was able to get a chart from Mike, who does my editing and some of my charts. So I was able to mark it up and give it to you guys. And for you guys, I think that was like 7 in the morning. So everyone's like, Red Dog, why are you still helping us out here? I'm like, because I'm sitting down on lunch. Why can't I send you a chart after I've been up since 8 o'clock in the morning? I already ran. I already was with Chase and my wife down at the beach the whole entire time, so I could sit down for 15 minutes and say, guys, I'm just going to reconnect a little bit and let everyone know some thoughts. And then by the time the end of the day happened, I think, what time was it? It was like in the evening. I was already done with dinner, and I'm like, why can't I just, post another chart with some ending thoughts? So again, I care about what you guys are doing and how you guys are navigating. And I know a lot of people had a lot of frustration because of the misdirection, and that's what ranges do. Ranges are there to frustrate the bears because a lot of people got caught short pressing, and also frustrate the bulls or have them think that maybe there's a hope. And then if they resolve lower, all of a sudden the shorts that got squeezed out don't want to jump on, and all the guys who are thinking we go higher have to get out of the way. Or if we go higher, then the shorts better get themselves out of the way, and then which levels you have to get above. But again, nothing is resolved yet. We're still sitting within this mini range here. Okay, with resistance above, this is actually resistance above, and then this is real resistance above. So if it wanted to go, just don't be, you know, let the shorts burn a hole in your pocket. Say, I got to short it now. It's the first up day when, look what happened here before rolling down. So some guys started shorting on this day and all of a sudden might have got squeezed out into that day. So you need to know where we are within the ranges and your risk tolerance and your commitment level to your base case or your thesis. And at this point, I don't think anyone should have a real thesis except for we are in complicated times. We do have an inverted yield curve that usually does point to a recession, but it's still with the new technology and the black boxes, who knows if it's the true reflection of what's going on in the economy down the road. We have a president that loves to tweets that changes the complexion of the tape every other day. And we have a stock market that's only 5 to 6% off the highs, and we're in a 10, 11-year bull run that who knows, maybe this is not going to be a normal correction. It could lead to a lot more. So that's why you need to be on your toes either which way. But if you trade for the long term and you trade for, not if you don't trade for the long term, invest for the long term, these are the times when you make sure you keep doing your monthly inflows to your 401k, your 529, your 403b, whatever you do, because they help your average cost. Don't get scared. If you're 20, 30, 40, and you have 20 more years, don't you worry. And if we do go down more than 10% from the highs, maybe you throw an extra inflow in there. That's how you get your alpha. But if you trade for a living, and tomorrow we'll decide what you get paid on the 15th of September, then you better be careful and you better know what the market's doing. You better know where your levels are and you better keep working on your process. And with that said, I hope all is well. It is 12/22 on August 28th. It's a Wednesday. This is my little midday report. I hope you enjoyed it. If you want more, I do a morning call just like this, a little bit smaller every morning, and a recap. And I also write a full note that has all the levels and thoughts and actives, scenarios, as well as 14 to 20 charts that do get updated and posted. Usually for Red Dog T3, I put out just an S&P cash to give you a little bit of a blueprint, but on Regular All Access, I post about 14 names, usually the fastest, most active in-play names with different types of scenarios to let you figure out how you can navigate according to your process. I will, if I don't speak to you today, I will be in touch and you'll see me on Twitter. Have a good one. Bye bye.